Buying a home with inheritance money. How to use inheritance as a deposit. In this guide, we're going to walk you through the exact steps on using inheritance to buy a home, including how the banks look at it, if they consider it genuine savings, and the step-by-step process in using inheritance to buy a home. So if you're in the position that you're expecting inheritance or you potentially have been gifted one, we're going to take you through the exact steps you need to know to buy a home today.
Come on, let's get into it.
So let's start from the top. How does getting an inheritance work? For most of our clients, an inheritance is a bit of an unexpected gift from a loved one or someone that's passed away. But how does the money end up in your account? Generally, the person that passed away would have had a written will, which would determine how they wanted their estate or all their belongings to be divided amongst their friends, family, and loved ones. The executor is appointed to ensure that the will is distributed as per the person's wishes. If there is no will in place, the estate will be divided evenly by the court, which is a whole separate process. Once the estate or the assets belonging to the deceased person are divided, the remaining debts will be paid out and then the assets will be distributed. In most cases, how inheritance is actually paid out comes down to the fine print, which also influences how it's paid, if it's paid in small sums over a period of years or in one big lump sum. There can also be restrictions placed on how the inheritance is used. A common one is for education purposes. I've even had clients that have had their inheritance restricted purely for the purpose of buying their first home. Some other inheritance terms are when milestones are met. You might have to wait till you graduate school, university, etc. The time frame in which you receive inheritance can vary greatly. It can sometimes be a time-consuming and lengthy process and take months and years. The positive thing is once the money's actually been released into your account, it's generally yours to spend. Inheritance can be used for many things, and using it as a deposit is certainly one of those things. But there are some tricky factors you need to be aware of. In particular, two important factors that the banks will want to confirm before giving you a home loan. Firstly, prove the inheritance is non-refundable. To qualify for a home loan using inheritance, the payment has to be non-refundable, and for some banks, you might actually have to prove it. Usually a letter from the executor confirming the details and the amount and when it was given to you as a beneficiary will do. In some rare cases, you may need a copy of the will and grant of probate. Ask your solicitor or executor for a copy of this. It shouldn't be too hard to get your hands on. The second thing is the bank's going to want to see the inheritance in your bank account. Once you've proven the money is rightly yours, you need to show the funds to your bank account or have a statement that has the name of the executor or trustee of the deceased estate. If the inheritance isn't in your name, you'll need a letter outlining that you're legally able to access the funds. But if you are getting an inheritance, how much can you actually borrow? In general, as a first home buyer, you need a 5% deposit as a minimum, plus other costs like the stamp duty, government fees, and solicitor fees. We have a whole bunch of other videos on the minimum deposit you need and how to get a home loan, which you can check out in our channel below. How do the banks see inheritance funds? Are they considered genuine savings? Well, firstly, what are genuine savings? Genuine savings show lenders that you've got a bit of hurt money in the property.
So where's the money?
Lenders like to see at least 5% of the purchase price saved in your bank account for around 3 months. In other words, some lenders may want to see the inheritance sit in your bank account for at least 3 months. The good thing is not all banks will want to see this. Some are okay if you have more than a 20% deposit to waive the genuine savings requirements. Others are okay to look at your rental lease and just say, well, Jaden's been renting for the last 12 months. He's been paying on time, and that's okay, and we understand that the inheritance funds aren't genuine savings. This is where a mortgage broker like us can really help out and find a bank that's going to work with your situation and find a home loan that meets your needs. The benefit of having an inheritance as your deposit means you're going to be able to get into the market a little bit quicker and potentially get less of a loan because you get a bigger deposit. But are you still possible for the first homeowners grant if you get an inheritance? The good news is yes, you're going to be still eligible for the first homeowners grant if you get an inheritance. The amount of the grant depends on the state. In general, you need to be buying a brand new property that's never been lived in, and it has to be under certain values. The amount of the first homeowners grant depends from state to state. It's up to $30,000 at the moment. But as I mentioned, it does have some criteria. You need to be a first home buyer. The home value needs to be under $750,000 in some states. It varies. Some are lower. So check out the criteria. We have a whole other video on that below. The other concern a lot of people have is, will the bank look at me badly if I haven't saved the money myself? To be honest, if you're buying a property with an inheritance, you're viewed just like any other borrower.
You guys are all the same.
You're going to get the same interest rates that are available for other borrowers with the same amount of deposit. The banks look at your income and your borrowing capacity, so they'll work out how much loan you can get based on your income minus your expenses, then also how much property value you can get from your deposit. Add the two together and you work out how much home you've got. So for example, if you've got $500,000 borrowing capacity plus $100,000 in savings, all up, you might be able to buy a home for $600,000. We have some calculators on our website to help with this because there's other costs like stamp duty that need to be factored in. And if you're not sure, just hit us up. We have a free assessment we can help out and work out what your borrowing capacity is today. Another question I've been asked is, should I pay off personal debt with my inheritance money? You might have an existing personal loan, you might have HECS or student debt, and be wondering, well, should I just pay that out, then look at getting a home loan afterwards? Not too long ago, I was helping Kate, who was in this exact situation. She received an inheritance of $40,000 from her grandmother who'd passed away. She had a car loan of $10,000, but was costing her $1,000 a month in repayments. I sat down with Kate and did the numbers, and we worked out if we paid off her $10,000 personal loan, her borrowing capacity would jump up by $172,000. This is where there can be a bit of a balancing act, because then you might have less deposits, so you pay more in lender's mortgage insurance and other fees, or it can reduce how much you can actually buy a home for. So sit down with a broker like us to see what's going to work best in your individual circumstances. At Hunter Galloway, we're mortgage brokers. We help home buyers across Australia. If you need help with a home loan, if you're going to receive an inheritance and you're not sure what to do, if you pay off personal loans, if you get a home loan, use it as a deposit, hit us up. We'd love to help. Check out our website, huntergalloway.com.au. And until next time, see ya.